And we are live. What's going on, guys? It's Ricky with TechBot Solutions. Hope that you guys are all having an amazing Sunday. It is 8:27 p.m. here in Arizona. I know it is a little bit later, especially for those that are out there in the East Coast. Just wanted to go live very quickly and talk about what to kind of look out for this week. It's pretty straightforward this week of what we kind of have in store. So I'm going to talk about the main, in my opinion, economic event that I would pay attention to, and you guys can begin to share your top stocks in the live chat, and I'd be more than happy to break it down for you. Okay, so let me go ahead and just post this very quickly. Let's go live. Just posting this to some of our members in the LPP group chat. So again, if you guys are not part of LPP, you do not have to. I have over 4,000 free videos on YouTube. You're more than welcome to check out. But if you do want to watch me trade live every single day, I'm going to be trading live tomorrow. We'd love to have you there. You can join for as little as $1.35 a day is with the current sale we have going on. It's a one-time payment, lifetime access. If you want to learn more about it, second link in the description down below. So, all right, and there we have it. So link is shared. What's up? What's up? Happy Sunday. What's going on, guys? What's up? What's up? Palantir still for short? No, it looks like NASDAQ market is still holding up pretty well. Still overbought, but again, Palantir, I like to call it Thanos, right? It's incredibly bullish over kind of like the larger time frames, but I think we have an interesting week ahead of us. So let me go ahead and just jump right into it. Do not forget, you guys all have access to this trading tool. It's the real-time economic calendar. It's under techbotsolutions.com/trading tools. And very quickly, when you click on this week, it tells you the series of reports that are going to be released on Tuesday, Wednesday, and then Thursday. Nothing too significant in my opinion through those specific days. But on Friday, we have the Jackson Hole meeting. And this is where Jerome Powell is going to be going pretty much live and just sharing. And I'm sure he's going to be asked the question of, how does he feel about the current labor market? How does he feel about the current CPI inflation rate, but also the PPI inflation rate, right? The PPI inflation rate last week that was released came in significantly higher than what was expected and was a huge surprise, right? But overall CPI for last week came in, and it came in lower than what was expected, right? So it's a very... It's sending a lot of mixed signals. There's no question that there's a lot more weight put on CPI than PPI, but PPI tends to be a forecast of inflation that will later get passed down to consumers. So I wonder if Jerome Powell will comment on that, because remember, do you guys remember last week there was almost a 100% probability that the Federal Reserve was going to cut? It's now going down to 83. And I wonder how it's going to end by the end of the week, right? Because now there was like a 3% probability that the Federal Reserve was going to do a 50 basis point cut. And then now that's completely out of the picture. Now it's going back to possibly pausing because, again, overall PPI came in significantly greater than what was expected. And this happens over and over again, where we start off that, yes, the market is certain that the Federal Reserve is going to cut rates. And then as more economic reports get released, we begin to get a different sentiment from the Federal Reserve. So this week, the reason I believe Jackson Hole meeting will be the most significant focus for the market is because we are waiting to see what the head of the Federal Reserve, Jerome Powell, has to say about these current economic reports. Because remember, the market is trying to interpret these economic reports based off of what they believe the Federal Reserve is going to do. But now we get to hear it from the man himself. Now, again, Jerome Powell's not the only one that dictates what happens. He's just the head of the Federal Reserve. It's still a committee. They still have to collectively vote on it. So that's a great thing to remember. But it's a very, I don't want to say it's a very interesting week. We do have also a series of companies that are reporting earnings. I shared it on my Instagram if you guys checked it out. But it should be a fun week, right? It's nothing crazy. It's not like huge earnings are set to be released, at least not to my understanding. I don't think NVIDIA, quite a different company. Let me see. Nvidia doesn't report this week, do they? I think is it next week? Yeah, not this week. Okay. All right. Let's do it. Any questions that you guys have, just feel free to share it in the live chat and would be more than happy to break down any stock for you. Okay, so yo, what's up, Ricky? Do you have any advice for a beginner? Been following you for a long time and finally starting to trade, although it seems very intimidating. Gonna give it a shot. Jonathan, the best thing that I can encourage you to do is that it is intimidating, right? It is very overwhelming. When I look at my screen that I'm looking at right now, if I had no idea what I was looking at, I'm like, holy crap, what is all of this? What is all of this? What is all of this? So first off, I have a playlist on my YouTube channel. It's called the Get Started playlist, and it goes from start to finish. I think it's 4 different videos. It shows you how to open up an account, how to set it up, how to buy and sell a stock, and then it shows you one of my live trading sessions. I think you need to take time to just become familiar with the platform itself. So instead of just jumping in and expecting that you're going to plug and play and start making money, in my opinion, there's a learning curve, right? First you need to understand how the platform even works. I use Webull. You don't have to. There's a bunch of amazing trading platforms out there. All the links are provided for you down below. You're more than welcome to check it out. But that would be my first encouragement for you, is become familiar to see if this is even a market that you do want to partake in, right? Some people are encouraging you to paper trade. Paper trading is something that I cover in the Get Started playlist. So again, my first encouragement for you is watch that Get Started playlist. It's free. It's going to allow you to become more familiar with the platform, how it functions. There's a learning curve within itself. That might take a few weeks to even fully understand. And then you can begin to pick up on, how aggressive or how conservative you want to be in this market. Do you want to trade risky stocks, TEM, HIMS? What's another risky one nowadays? I don't know. There's a ton of them. ALTS, Palantir, Oscar. Or do you want to be more conservative, right? Do you want to learn how to walk before you run? Just get your feet wet. Do you want to focus more on QQQ, SPY, Apple, maybe Nvidia? Nvidia can be a little bit volatile, but again, you can begin to ask those questions later down the road. The first step would be become familiar with the platform. I think that would be a lesson within itself, and then you can begin to decide, okay, how much money do I want to trade with? And again, that's all something that we talk about in that Get Started playlist. So, all right, stock is considered low risk compared to meme coins. I don't think meme coins should be the, the measure of, like, the metric that I want to compare things to, right? For my risk tolerance. Maybe that's just me though. So again, if you guys want me to break down your top stock, just feel free to share it in the live chat. So Oscar, while we're talking about super risky stocks, let me make this very clear. I do not trade Oscar. I do not trade super risky companies like this. I know a lot of beginners watch my videos. I just do not think that it's a safe stock to trade. Just because I don't doesn't mean that you shouldn't. I'm just making you aware. Oscar, in my opinion, is a pump and dump. But again, there's a lot of companies this year that are pump and dumps, and that can still pump. If you take profits, you can still make a decent amount of money, right? And you just have to know when to sell before it dumps again. Oscar does have a previous support range right around $13.50 to $14 per share. It tends to be more of the oversold range. There's a common resistance range right now right around 16.50. It looks like it kind of struggles to break above that. There are points where it does pop up above 16, but then quickly retraces, pops up, and then quickly retraces. So again, it doesn't normally hold above 16 for a very long period of time unless volume is incredibly high. So again, Oscar, in my opinion, is a momentum play. It's incredibly risky. I don't care about shorting it. I don't care about going long on it. I just Again, if you're a beginner, if you're struggling to be consistent, I really don't think that trading stocks like this are going to be in your best interest. Just my 2 cents. So what do you think about Visa? Let's break it down. Again, if you want me to break down your stock, all you literally have to do to partake in this live chat is be subscribed to the channel. So drop a thumbs up, be subscribed, and share your top stock in that live chat, and I can break it down for you. I like Visa. I like Visa's technical setup. I'd have to look into its fundamentals, but it looks bullish over a long period of time. On the 4-hour time frame, I'm kind of seeing these lower highs and lower lows. Do you kind of see that? It looks like it had a nice run up, testing its resistance here, and if it gets rejected again, it has another leg down. If it breaks above this, then we can go back to see if we can retest previous highs, but it has a resistance at 350 based off of previous resistance. It's done a double top here already, previous consolidation here. So resistance here at 350, 360, 360, 360. And again, we're kind of forming these lower highs and lower lows. So when I'm just looking at the technicals, it doesn't look like an incredibly bullish stock. It doesn't look like it's a stock that I need to trade this week. If I'm trying to make money this week, especially, I don't know if Visa is going to be it if your intention was to go long on it, right? It looks like it's testing its moving average as its resistance, and it could possibly see another leg down. So again, we'll have to see what we get confirmation of. Break above or break below. I think that would be a great step. Set those alerts. All right. Okay, you don't have to spam the chat. I'd be more than happy to break it down for you. Just you don't have to spam it. What do I think about Robinhood? I think Robinhood is incredibly overvalued. I think that we'll look back once this bull run for crypto fades and reality begins to sink in. I think we will begin to see a very similar setup, not as extreme. I hope not as extreme. I think that would be devastating for a lot of investors. But from what we saw before, to the retracement when it lost about 90% of its value, to the pump that we're now experiencing. A lot of people, again, when they're a little bit newer to the market, don't take enough time to look at the larger time frames. Remember, different time frames give you different perspectives. It's easy to say that this stock is going to continue to go up when all you've seen it do is go up, right? But when you're a little bit more I don't want to say experience, right? But when you've spent a little bit more time in this market, you know that these companies pump and they dump, and a lot of them have the history of doing so, just like Robinhood. Robinhood is no stranger to pumping and dumping. And it's really easy to be like, yeah, this thing's going to pump forever. But what happens when the crypto run fades, right? And all that hype begins to fall apart. For the meantime, again, if the intention is to make money just this week and maybe during specific days, yeah, again, I think it's all dependent on how the market is going to interpret this Jackson Hole meeting. I think it's if markets continue to push up higher, because I think that Jerome Powell and this Jackson Hole meeting is going to be incredibly bullish and in favor of rate cuts, then of course, these things can push up even higher, right? No question about it. So then I would possibly want to go long. Do I think it makes sense to be invested long-term with Robinhood, buying it at 116 per share? Heck no. I don't think anyone with common sense would want to invest in Robinhood at 116 per share at these current levels, knowing where we currently are at. Now, again, it doesn't mean that it can't go higher. Who's to say that Robinhood can't go to 130 per share? That's not the point. Sure, it could go from 115 to 130. That's a $15 increase of price per share. Okay, $15, but what's the potential for loss? Well, even if we just retrace to previous highs, that would be a retracement down to $62, $63 per share. We're currently at 116 or 115. So that means that we could possibly lose, what is that, $50, $55 per share? So for $15 per share, you would possibly risk $55. Again, the risk to reward ratios just don't make sense long term. It's easy for people that are invested at $30 per share to be like, yeah, buy more, because they're invested at such an affordable and good deal price based off of the current price level. But now at these inflated levels, I can reassure you that no one that has an average purchase price of sub $30 per share would double or triple their position at 114 per share, because the risk would just be too high. So why should you, right? So again, in the shorter time frame or shorter timeline, of course, Robinhood can continue to pump. That's what it's known for, right? But don't be surprised on these big retracements, right? Especially nowadays when we're at such a critical time where we're waiting to see if Jerome Powell and the Federal Reserve is actually going to, begin to cut rates. Let me go ahead and do two more, and we will call it a live stream. So, all right. Microsoft with good earnings dropped after 322. Your take? It's just not trendy. right? It's not relevant. Like, this is the part that annoys me about current markets, is that it's not Palantir, right? It's not Tempest AI. It's not, in my opinion, it's not like these bullshit companies, right? Microsoft is a cash printing machine. Fundamentally, Microsoft is a very good company, right? And it reported great earnings. So if we look at Microsoft, if I'm not mistaken, yeah, its P ratio is 38, which is actually a little bit on the higher side. It's actually higher than what I thought. I thought it was sub 30. So 38 times its earnings. It has had a recent really big gap up, so it is very overextended, but not in comparison to like Palantir or all those other BS companies that we know that once markets begin to downturn, those things will see a 50 to 80% decline. As of right now with Microsoft, am I surprised that it's retracing after it reported earnings? No, not. I mean, again, these can only move up so much in such a short period of time. You have to think about it. This thing went from 360 per share up to 550 in like 60 days. 90 days. This thing was an absolute insane move. It's a 50% increase in 90 days. Think about that. That's insane, right? So if I were to ask you, looking at overbought and oversold levels, does this look overbought or oversold? Anyone with common sense, if they weren't emotionally biased about this stock or any of the stocks as of right now, they'd be like, yeah, this thing's overbought. Maybe it's due a little bit for a retracement. But again, we'll see. It's all dependent on the tone of the Federal Reserve this week. Do I think Microsoft is an incredible deal at $5.20 per share? No, technically I don't. And also fundamentally, I'm not a fan that it's north of 35 when it comes down to its P ratio. So I still think it's, again, a cash printing machine. It's a net income. It makes actually $100 billion profit a year, and it produces $281 billion in revenue. Like, at least, there's a reason that this thing's a $1 trillion company and almost a $4 trillion company at that, right? So it's incredibly valuable for a reason, and it prints money. Like, would I want to bet against Microsoft? Not necessarily. I mean, I think once it begins to break below EMA, right, and begins to actively drop on the day chart, I think there's potential there. But out of everything, I mean, if Microsoft is selling off, that means like a lot of other stocks are probably selling off because it kind of moves with the market. So then at that point, I wouldn't care to short Microsoft because I believe the short potential is much greater on shorting bullshit companies like, overvalued companies like Palantir or like HIMS or like TEM, companies that we all know are going to crash. MSTR, right? It's great to see them pump as much as they are right now because we all know they literally will not hold at those levels long term, right? So let's go ahead and move on to the last one. All right, Root. We've done that one before, no? Okay, this one won't be the last one just because it has lower volume. I'm not a fan of this. Yeah, so I can see why you're paying attention to it. Recent drop, a lot of consolidation, possible recovery. I would have to look into the fundamentals on why it dropped, but yeah, I'm not a fan of this. It looked overbought in the first place. It looks like it did sell off. If you think that it's going to recover from that, again, I would still wait for confirmation. There is no confirmation of this reversal. So if I'm just looking at this as a technical setup, 3 stages of a reversal, right? Rejection, consolidation, and then confirmation. If we have no confirmation, then we have no entry on this trade setup. That's as simple as I can put it. This thing has incredibly low volume, so I personally would not trade this myself regardless of that confirmation, but that's just my 2 cents. Let's go ahead and move on to the next one. UNH. Yeah, let's end it with that. UNH, United Healthcare. What do I think is going to happen with this stock? I think that it will retrace. I think that I talked about this last week. A lot of you guys liked the way that I broke things down when it came down to UNH. I think UNH is a very solid company, but I think that we all just need to realize is that it's great that Warren Buffett announced that for the past 2 quarters, he's poured about $5 billion into this company. But you have to remind yourself, that means that he's been riding the sell-off probably more than you, right? So he sees the value in this company long-term, and I think that's great. It's adding a lot of conviction, right, to this setup, but you need to remember it's selling off for a reason. It was selling off because it's being investigated, and that doesn't go away just because Warren Buffett is invested in it. So again, Any reaction tends to be an overreaction. It's great that we've gapped up. I wouldn't be surprised if we see a retracement once the hype of Warren Buffett investing begins to fade. Because again, if anything gets announced where they're digging deeper into the company, they found something, what do you think is going to happen, right? More selling pressure, more concern. But again, maybe this is the turnaround point. Maybe it does just go up from here, right? If there's ever been a market environment that can support that irrationality, it's now. You guys know that we've been talking about UNH since it dropped. I have always presented it as fundamentally a good company and incredible fundamentals, but I also wanted to shed light on the timeline it might take for it to recover, right? Because of its current investigation. So UNH is a big deal. It's literally, I believe, the largest healthcare company in the United States that's publicly traded, at least. So yeah, I would say it's a pretty big deal, but it's still being investigated. So again, something to make sure that we don't just ignore because Buffett is investing in it. I don't want anyone investing in it now just because of Warren Buffett and just expect the stock to only recover. We're at $304 per share for UNH. It was previously trading at $260, at $230. So again, how terrible would it be for me to be like, yeah, everyone buy. Warren Buffett's buying, you should buy too. That'd be like all the crypto idiots, right? It's like, well, no, let's explain the big picture. It was announced that he bought, it acted as a catalyst. That catalyst tends to fade. The stock will most likely, that hype will fade, and then the stock will retrace. So again, if you don't align with the timeline and the original intention, then you shouldn't just be investing just because Warren Buffett is doing, right? His criteria is not your criteria. So different timeframes and different criteria for different traders and for different investors. So I appreciate nothing, or I wish you guys nothing but the best. Thank you guys for spending part of your Sunday with me. And I'm excited to kick off this week. Again, the biggest takeaway, I would say, the biggest reminder that I would love to have for all of you guys is do not forget about the Jackson Hole meeting this Friday. I wouldn't be surprised that the entire market is just really focused and honed on what is Jerome Powell going to say, what is his sentiment, and also the wild card, Trump. What deals is he talking about? What deals is he signing or saying that he's going to sign? And what tweets is he going to send out to try to mitigate the influence that Jerome Powell might have on Friday? Something to pay attention to. If you're part of my LPP team, I'll make sure that I do my part in keeping you guys up to date. And again, if you ever want to tune in to watch me trade live, it's a one-time payment for lifetime access, and it's the second link in the description down below. I appreciate your time. Like always, let's make sure that we end the year on a green note.